Welcome to the Resilience Advantage, a series brought to you by the U.S. Resiliency Council and Optimum Seismic. I'm your host, Evan Reese. In this series, we're exploring what resilience means to the long-term sustainability of our communities in the face of natural disasters like earthquakes, hurricanes, floods, wildfires, and now even pandemic. In this episode, we consider how disaster resilience is being driven at the public and private levels, and how the proper policies can motivate building owners and all stakeholders in the built environment towards long-term thinking. We'll discuss two types of disaster-resistant policy: mandatory ordinances and financial incentives. Both are being used by local, state, and federal governments, companies, and financial institutions to push and pull stakeholders toward building more resilient communities. The first type of disaster-resilient policies we'll discuss are local or state ordinances that require older, vulnerable buildings to be seismically retrofitted.
Many of those were built in the 50s and 60s, maybe into the 70s. Our engineers at the time learned that unreinforced masonry buildings were not going to be good performers in earthquakes. Many of them collapsed, caused a lot of the damage as well as the deaths and injuries in that earthquake. If you jump forward to the 1971 San Fernando earthquake in Southern California, that really highlighted the vulnerability of a class of reinforced concrete buildings that had been built in the 1950s and 60s, what we call non-ductile concrete. And really that's the type of concrete that doesn't hold together and doesn't have the ability to flex in an earthquake. Jump forward to the 1994 Northridge earthquake in Los Angeles. We learned lessons there about steel buildings, steel moment frame buildings, as well as what we call tuck under parking or soft story construction, and also reconfirmed a type of construction we call tilt up construction, where we have concrete walls and wood roofs. You think of large office park type of areas where those have a lot of damage in that earthquake.
Several cities, primarily in California, have passed ordinances over the past 20 years that require one or more of these vulnerable building types to be seismically retrofitted to better protect their occupants.
We can point to about 10 or 15 largely California cities that have adopted, in particular, retrofit ordinances for various building types that are known to be higher hazard. Each community tends to do it in their own way. These are local negotiations between the different stakeholders. So in some communities, rent control is an issue. In San Francisco and Oakland, they had to make negotiations over how much of a retrofit cost could be passed through to tenants. In other cities, rent control isn't a problem, but the business community argues that they need special financing or incentives in order to be able to justify the costs of the retrofits. So the emphasis in that city might be on ways to get money into partnerships that will make these projects possible.
Soft story structures have been a major focus of many cities because they are often apartment buildings that house some of our most vulnerable or elderly populations. San Francisco was the first large city in the nation to adopt a soft story retrofit ordinance. Patrick Ottolini was the city's chief resilience officer when the ordinance was passed in 2013.
Primarily, our signature program was the soft story ordinance. Improving the homes of 120,000 San Franciscans that live in rent-controlled apartments is probably one of the single biggest efforts we've done to preserve naturally occurring affordable housing in San Francisco. It's huge.
Educating and giving the public information on their earthquake risks is essential for achieving broad support for mandatory ordinances.
When you're doing this, you're asking people to think about things that they don't like to think about. And especially when they think about their property, which is usually their largest financial asset, and that it might be at risk or exposed in terms of seismic risk, you start to see light bulbs go off. And I think that's really important because, getting the public behind this, getting consensus around thought about seismic safety is huge, and it's a tough thing to do. So these programs take great steps on informing the public and getting them on board.
As we've said throughout this series, the occurrence of natural perils is a matter of when, not if. If we could predict that the next earthquake would hit San Francisco within a week, most of us would take whatever action we could right away. But stretch that timeline out to years or even decades, and many people don't worry about something so potentially far away.
So getting people to think about long-term strategies is a very difficult thing, and it's a very hard thing to get leadership to be able to push forward ordinances or requirements for retrofits because of this reason. Now, putting good science in front of these leaders, showing them the situation about the potential damage, about what our recovery looks like, about what our displaced resident count would look like, that starts to get the attention of people. Because one thing we know is disasters make existing societal problems worse.
Another success story for how a city, one smaller than San Francisco, successfully implemented a comprehensive seismic mitigation program is Santa Monica, California. Ron Takaguchi, who is now the building official in Burbank, California, was Santa Monica's building official and was instrumental in guiding the city through the development of its retrofit ordinances. Education and awareness were key to bringing all stakeholders together to pass ordinances requiring that vulnerable buildings be seismically retrofitted.
Santa Monica was successful in having their seismic retrofit program initiated and passed by the community and city council, mostly because of the recognition of seismic risks to the city and the greater need for continuity and resilience. It's recognized that each city could be on their own for several days, if not several weeks, and resiliency is a key. The challenges are similar, I think, wherever you introduce a seismic retrofit program, and some of it is the typical things that you hear. I didn't have damage in the 1994 Northridge earthquake, although the neighbors might have. So maybe my building is stronger, maybe my building is less at risk. It took a bit of convincing from the scientific community. One of our greatest advocates, of course, is Dr. Lucy Jones, who advocates not only for earthquake safety, but building safety. And she was gracious enough to spread the word with California building officials, and she came personally to the city of Santa Monica, and she's worked personally with the city of Los Angeles in helping spread the word about building and seismic safety.
So retrofit is something that's really important in our community for so many reasons. There's so many liabilities around the aspect of vulnerable buildings in our community that not only impact the business person themselves, but it impacts their employees, it impacts the community. We know that there's over 1,400 buildings that have been tagged as vulnerable buildings in our community. Our city has done their job on reaching out to those businesses to let them know that they have responsibility to correct this and to move forward and make their buildings safer.
When cities like San Francisco, Los Angeles, and Santa Monica pass and successfully implement mandatory retrofit ordinances, it makes it easier for other cities to follow.
I think all cities could benefit from the efforts of cities that have initiated seismic retrofit programs by recognizing their own city, recognizing where vulnerabilities might be, taking the effort to look at records, advocating the community with seismic safety awareness, and where possible, approaching the city council and getting funds for consultant services to help develop a seismic retrofit program.
These California communities have helped pave a path that is easier for other cities to follow, including how to work with segments of the community that might not be very enthusiastic about the new mandate.
It's also not necessary to jump in with both feet and mandate retrofits of all the vulnerable building types at once.
What I would say to cities that are worried about going to the mandatory policy step is that there's a lot of options they can take short of that will still do a lot of good. One of them is to inventory vulnerable buildings in your community. And that's actually a really essential first learning step in order to assess how important this issue really is. So once you get some facts on the ground, what buildings you have, of what types, who owns them, what stakes are involved in your community in tackling this problem, then you're much better informed to know how to prioritize this against other issues your community is facing and who you need to build coalitions together with in order to make progress.
Small cities can do a lot. You know, people think of San Francisco as a big city with big resources, and yes, that's true. But those resources weren't tapped in terms of dollars to be able to launch this program. This was all about community. So if you get a community behind an idea or a concept, it's more powerful than people give credit to it. One of the things I did a lot when I worked for the City and County of San Francisco was lend ourselves and our expertise to smaller cities, working with cities like Berkeley or Alameda. We worked with everyone from local building departments to elected leaders to share our stories. And that was one of the most favorite experiences I had, is because we could show them what we did and what we had done right, but we were also very honest about where we could improve.
While most mandatory ordinances deal with mitigation of older, vulnerable buildings, some owners are making resilience a requirement for new buildings. In past episodes, we highlighted both the state of Oregon and the state of California, which required resilience to be considered and incorporated into the design of new office buildings, both to protect the state's considerable investments and to make sure that the buildings would remain functional when a disaster strikes. We've discussed the first disaster resilience policy, mandates, the stick, so to speak. So let's turn to the carrot, incentivization. When a building is made more resilient, many stakeholders benefit. Of course, the owner protects their property and business and also reduces their liability. But cities, counties, and states also benefit by having a more stable tax and economic base after a disaster. A mortgage lender benefits when the risk of a borrower defaulting on a damaged property is reduced, and insurance companies reduce the risk of costly claims. It seems natural that these other stakeholders who benefit when buildings are made more resilient should contribute to the cost of making them so, and not leave it all up to the owner. Unfortunately, as we learned in a previous episode from Jonathan Cohen, who renovated the historic Society Hotel in Portland, Oregon, these incentives are often hard to come by.
There are some incentives out there. One of the incentives is a really attractive loan that our urban renewal organization, which is called Prosper Portland, offers, and we did take advantage of that. But there was really no priority in permitting, no special perks, no assistance, no leniency whatsoever. And it's a real problem for doing this type of work, and it's a real barrier to why there's not more of our buildings that are prepared for resilience in Portland.
Business owners generally recognize that having safe and resilient buildings is important to their businesses. And several chambers of commerce and business associations are working to partner with local jurisdictions to make resilience a win-win for everyone.
Well, I think one of the ways that we're going to get our businesses to actually retrofit is finding incentives. You know, whether it's a private-public partnership, or it's a city-funded program, or it's coming from some of our larger utility companies, or, you know, and I think that's the most important thing right now is to create support so it does happen.
Anything that's going to be a mandate from government that increases your cost is businesses a bit wary, as you might imagine. We prefer the voluntary and the incentive programs, and then people go. That's much better. That's like a win-win operation. Rather than mandating that everyone have to comply, they say, we will either expedite your permitting, we'll offer some incentives, this is a good thing, and if you do it, there's some other reward that comes into play, you know, through the government process. Those are the things we tend to, both our members, the companies, respond to, because the ones that have some appetite or willingness, then it helps them move faster, farther, go to it. We definitely understand both sides of the equation, and there's a gentle balance around how much is encouragement, paving the way, using the carrots to get people to go, and then how much is the stick, saying it has to be done for the betterment of our lives here and our communities.
So I would say at the very baseline, it would be permitting. You know, if there's a way to fast track the permitting that shows a public and private partnership where the city acknowledges that they're making these changes because they're creating safer buildings for the community, safer buildings for employees, safer buildings in our city, that there really shouldn't be red tape there or long drawn out processes. Additionally, I think if there's, a micro grant / loan program where maybe the overall cost isn't completely burdensome on the employer, that there's some funding available where the initial cost to get the ball rolling was achieved through a micro grant.
There are a number of other creative incentives that cities can offer owners who build more resiliently and reduce existing property risks.
One tool cities can offer is exemptions or special privileges for buildings designed to meet higher resilience standards. So maybe you offer a little more parking, maybe you offer relief from parking rules. If you're able to make trade-offs in what you give an owner to be able to invest in resilience, that can be a real win-win.
Just like Patrick Ottolini mentioned earlier about the need to bring stakeholders together to form consensus around resilience mandates, having local and state leaders as champions to partner with the private sector is the best way to bring incentives to bear.
I think it's critical that the state takes appropriate steps to further incentivize local jurisdictions to want to also go that route. And so I think it's going to be very important for the state to come up with incentive programs, whether through tax credits or loan programs, to ensure that local jurisdictions are taking advantage of these programs and then further either incentivizing or requiring their businesses and residents to make the upgrades necessary for their safety.
Earlier in this episode, we talked about the need to have a long-term perspective when it comes to investing in disaster resilience. Unfortunately, many owners facing the short-term pressures of day-to-day cash flow don't always have that luxury. Insurance companies, by their very nature, are long-term thinkers. There are examples, particularly in the Southeast and Midwest, where insurance companies have worked with state and local governments to offer insurance discounts to building owners who have made their properties more resilient to wind and flood.
In places like Florida, for example, with hurricanes, if you have a new Florida building code structure, you have a 40% of your premium, you have an option to get a discount on that premium each and every year. So whenever we do a good job helping people see the linkage between having hurricane shutters and every year you get a discount, and after 3.7 years it pays for your shutters, then we win with incentives.
The California Earthquake Authority, which oversees much of that state's earthquake insurance, is currently helping single-family owners retrofit unbraced crawl spaces and reduce their insurance premiums.
The Earthquake Brace and Bolt program started in just 4 zip codes, 2 in Oakland and 2 in Los Angeles in 2013 and 14. And since that pilot program, we have retrofitted or assisted in the retrofit of over 10,000 houses. The program provides up to $3,000 towards this cripple wall retrofit, which consists of just anchor bolts and plywood around the crawl space and some framing clips at the top of that cripple wall.
There will always be pressing needs today that lead us to say it's just not a good time to invest in resilience for the future. But the truly devastating toll that disasters take on societies demands that we better balance our short and long-term goals. Building owners alone cannot be expected to shoulder the entire burden. All users of buildings benefit when they are made more resilient to natural hazards, and so all users should share in the cost of doing so. The U.S. Resiliency Council is committed to bringing together these stakeholders to form consensus around disaster-resilient policies that include both mandates and financial incentives. The only way we can succeed in making sure that the next natural hazard event does not become a disaster is by working together. Thank you for joining me on the Resilience Advantage.